All right. Good morning, everybody. Good morning, all you magnificent melon heads. Happy Friday, everybody. Today's March 22nd, 2024. The top story this morning is a strange move in the U.S. dollar. The DXY, or the Dixie, the U.S. dollar index, that's the strength of the dollar measured against other global currencies, is surging this morning. It's currently up about 82 basis points, 0.82% higher. It was up over 100 basis points at one point this morning, and it's pretty odd to see the U.S. dollar surging in value relative to other currencies right now, especially after what was, in my opinion, a very dovish move by the Federal Reserve this week, with Jerome Powell offering the market clarity on when quantitative tightening would start to slow, when it would end, when rate cuts might begin, penciling in 3 cuts for the year. It was a very dovish move by the central bank. But then we got moves from central banks all over the world this week, not just the Fed. And, well, I guess, you had this nice calm pond, relatively speaking. And then all of a sudden, from all different corners of the pond, 10 different guys throw cinder blocks in the water, make splashes, and ripples go every which way. And now the global forex market is adjusting to all these many actions taken by central bankers. And the net result at this moment is a stronger dollar. And that's got things like gold and silver reacting, Bitcoin reacting, stocks are reacting. They've made quite a mess. Just to real quick go through some of the actions that were taken this week. You had the Federal Reserve, obviously, no change to interest rates, but a dovish tilt on that slowing QT. And when QT might end, they tied it to the reverse repo. You had the Bank of Japan that finally made a hawkish move after years of fundamentally insane monetary madness. They finally ended negative rates with their itty-bitty little rate hike of 0.1%. So it was a much anticipated hawkish move, but it was a very weak hawkish move. And so the net result of that has been a dovish reaction, because everybody was like, man, we waited 15 years for that, and you don't even offer any clarity going forward. So the net result of that slightly hawkish move from the BOJ was actually a dovish reaction from the market. You had the Swiss National Bank that surprised everybody with a rate cut, everybody but Deutsche Bank and Goldman Sachs. That is, they were the only ones who predicted that move. But the Swiss National Bank, with their surprise rate cut, that is strong, or added strength for the U.S. dollar, because the Swiss franc is one of the contributors to the DXY. And so when we got that move from the Swiss National Bank, the Swiss franc started to weaken a little bit. That added upward pressure to the dollar, and my cat is attacking my foot once again under the table. The Bank of England made no change to their interest rates, but we did get a little bit of a dovish tilt from the Bank of England. The way their members voted, the last time the Bank of England made no move, there was 2 members of the BOE voted to raise rates, but they still, the prevailing vote was to not raise. Well, this time around, you had everybody voted to do nothing, and you had one guy voted to cut. So the change in the vote, although there was no net result in the interest rate decision, the BOA is leaning dovish. So the BOE leaning dovish, that's also putting a little bit of upward pressure on the dollar this morning. You had the European Central Bank, which no changes this week, but basically not committing to any paths one way or another. Pretty much the ECB sat out this week. You had Turkey came in with a surprise hike, although I guess it's not too surprising considering inflation is still 70% in Turkey. And then you even had Mexico getting in on the action today with a 25 basis point rate cut. So the net result here, although we had a dovish Fed, the prevailing winds in the world were also dovish. And I guess the rest of the world was more dovish than the Fed was. So the net result is you have a dollar strengthening right now. Look, forex is not the most exciting area of finance, currency exchanges. If you want to put a room to sleep, start talking about forex. But, wake up, guys. No, am I losing you? Did you fall asleep already? I know this is a riveting topic. But right now, that is the prevailing force in markets. Some other big stories we got going on. Evergrande is apparently now one of the largest accounting frauds, if not the largest accounting fraud in history. They are under the microscope. Over $70 billion of misstated, overstated earnings. In other words, they lied about how much money they were making to the tune of tens of billions of dollars. And now their auditor is in trouble. That's PricewaterhouseCoopers, one of the big four accounting firms. They signed off on Evergrande's books, and they signed off on a bag of shit. And, well, they're going to have to explain themselves to Chinese regulators. Not a good look when you've got one of the big four accounting firms signing off on the biggest accounting fraud in history. So it'll be interesting to see more of that. More trouble in China also. We got foreign direct investment came out today, down big time. Companies are pulling out of China, going back behind the wall or back behind the curtain, as my moderator Mish always says. This global economic divorce is continuing here. Not good for anybody, unfortunately. What else? So much going on in the world today. You know what? Why don't we just shrink my big melon of a head and let's see what's going on here. Guys, while we're doing that, don't forget, hit that like button and subscribe to my channel if you're new here, and have your coffee with the melon heads every morning as we go through markets, because we do this every day. The S&P 500 right now is in negative territory, just barely, holding up remarkably well considering what the dollar is doing this morning. You'd expect to see this thing down a lot more considering what the dollar is doing. I guess this is just renewed enthusiasm, AI mania, whatever it is. The divorce between what the economy is doing and what the stock market is doing has never been wider, or the gap between the two has never been wider. The Dow is also just barely negative here, down 5 points or 0.01% ahead of the opening bell. And the NASDAQ is down about 13 points or 0.07%. So we got all three indexes are in negative territory, albeit just barely this morning. Looking over at the bond market, we got yields are mostly lower. The 30-year Treasury is down 5.5 basis points or 4.388%. We've got the 10-year yield is at 4.214. That's down 5.7%. There is a lot of buying of bonds going on this morning. People buying bonds, bidding up the bond prices. That pushes the interest rates lower on those bonds. The 2-year Treasury is at 4.602. That's down 3 basis points. And the 1 month is actually up a tick at 5.381. That's up 1.5 points. Looking at the commodities board right now, we've got gold. It does not like the stronger dollar. Now, gold typically likes lower interest rates, but it looks like right now the dollar is prevailing. April gold futures at $2,175. That's down $9 this morning or 0.42%. Gold still is just off of its all-time high, though, of 2,200 and change. So gold holding up pretty well, all things considered. May silver futures also negative today at 24.86. That's down about 15 cents or 0.6% lower ahead of the open. April platinum futures are down about 0.8%. June palladium futures down 9.9%. And crude oil, though, is a little bit positive this morning. May WTI futures at 81.34. That's up about 1/4 or 1/3 of 1%. Shifting gears over to Bitcoin this morning, down again another $1,200. Bitcoin is trading at $64,220. That is as priced on Coinbase at this moment. So we had that big green candle up. That was the day of the Fed. That was Jerome Powell's uber dovish press conference. It weakened the dollar. It sent Bitcoin higher. But we're now giving back those gains and resuming that downward path that we've been on for the last couple of days here. And we've got another day of net outflows in Bitcoin ETFs. This one courtesy of Zero Hedge on X this morning. Once again, you got the black line here, guys. This is the money leaving the grayscale Bitcoin ETF. And then these other lines above the zero mark here, the yellow, the pink, that is all of the other Bitcoin ETFs like BlackRock and Fidelity and everybody else. And we've got more money leaving grayscale than there is flowing into the other ETFs. So that is now 4 days in a row of net outflows from Bitcoin ETFs. That means the ETFs are net sellers for the better part of the whole week here. That you better believe that's putting downward pressure on Bitcoin. That is behind this selling. So it looks like the initial enthusiasm of the Bitcoin ETFs is finally worn off. You know, if this was just a dip on the road higher, we would have seen 1 or 2 days and then moving up. 4 days in a row of outflows from the ETFs. That's now a trend. So we'll keep an eye on this one. Also, keep in mind, guys, we're, about 30 days away from the Bitcoin halving? I think less than 30 days away now. Typically, the 18 months following a Bitcoin halving, you get a monster bull run in Bitcoin. It's happened 3 times before. Will there be a fourth? Probably, although it's been having less and less of an effect as we go on. Now, here's the big one this morning is the DXY, the US dollar is measured against other global currencies. It's currently at 104.26, up 85 basis points this morning, or 0.82% higher. Just monster run in the dollar here. You may notice this red here. It did give back some of that. Now it looks like it's turning the corner ahead and higher again. But, again, all these central bank moves, the net result is a stronger dollar here. It's a little counterintuitive considering what the Fed said, but everybody else is more dovish. And so if you're dovish, but everybody else is more dovish, that makes you the de facto hawk in the room, or the cleanest dirty shirt, if you will. And so you've got people are going into the dollar, leaving other currencies this morning. Now let's talk a little bit about why that might be going on. Here's this one in Reuters from China. The China yuan slides to a 4-month low as state banks step in. The yuan is taking a bath this morning. China's yuan declined to a 4-month low against the dollar on Friday on expectations of monetary easing, breaching a key threshold and prompting state-owned banks to step in to defend the currency. In the spot market, the onshore yuan fell to the weak side of the psychologically important 7.2 per dollar level in early trades to hit a low of 7.24. It's the softest since November 17th of 2023. However, those weak levels were no longer visible on the charts towards the close of onshore trading, with the low for the day at 723. Some interesting analysis here. You can kind of tell that the analysts are also struggling with this move. This is Carlos Casanova, senior economist for Asia at UBP, saying that the strengthening dollar and sharp depreciation in the yen and some Asian currencies after the Bank of Japan ended its negative interest rate policy have weighed on the yuan. The market seems to have interpreted Asian currencies should depreciate further against the U.S. dollar. That is until the D-Day of interest rate cuts by the Fed, which right now are probably not going to happen until June at the earliest. Just to take a look at that chart that they're talking about here. Here is the chart of the yuan here. These are daily candles, and you can see big move up in this chart. Now, this is how many yuan it takes to make $1 or USD CNY if you're on TradingView. So this chart moving higher is the yuan weakening versus the dollar, and big weakening going on today at 7.228 right now. Again, that 7.2 is an important psychological threshold. We've broken through that level. I just want to zoom out a little bit on this chart to put this all in context. So, you can see here we had a big drop in this chart. That was the yuan strengthening significantly as the PBOC defended the currency at the same time that we had falling interest rates in the U.S. that started around Halloween last year. So right now it looks like the yuan may be about to fill that gap back up to about 7.3. But if we zoom out, we have seen that the Chinese currency has been weakening against the dollar for the better part of a few years here, and that's going on again today. Some other bad news going on in China. Check this one out. Evergrande's alleged $78 billion fraud is among the biggest ever. I was talking about this in my video yesterday with Melody Wright, who is just sharp as a tack, by the way. Check that video out. She found some very interesting things going on with housing and luxury homes in California that she suspects may be to this mayhem in China. That was an excellent video. This going on this morning, this story is actually a few days old here, but this speaks to just how bad things are in China. China Evergrande Group's alleged billion-dollar revenue overstatement escalates the legal peril of founder Hui Kaiyan, who is not in prison, by the way, who now stands at the center of one of the biggest financial fraud cases in history. The nation's top securities regulator said the developer's onshore unit inflated revenue by recognizing sales in advance in the 2 years through 2020 that led up to its default. It imposed a 4.18 billion yuan, that's about $581 million in fines against the unit. And that's money that Evergrande already doesn't have because they're already hopelessly in debt. So fining a bankrupt company, okay, good luck with that. Evergrande's alleged fraud dwarfs that of Luckin Coffee and Enron Corp, dealing a blow to the reputation of its former auditor, PricewaterhouseCoopers, and the country's financial oversight. It fuels concern about how widespread such accounting issues are, just as the new Chinese Securities Regulatory Commission chairman is trying to tighten oversight. And it's important that PricewaterhouseCoopers story, guys. Well, first of all, look at this one. Again, this is a chart I showed in my video with Melody yesterday. This is putting the major accounting scandals into context here. Look at little Enron right here. Look at little $600 million Enron, like a moon orbiting this planet here. Well, that's no moon. That's a space station. Check out the size of Evergrande's $78 billion fraud. Bigger than WorldCom, bigger than Luckin Coffee, bigger than Enron, bigger than all three of those combined. The biggest accounting fraud in history. I've been telling you guys for years that things in China are so much worse than they'll tell you. And if they're willing to admit things are bad, then it's a good bet. It's even worse than that. Case in point, a $78 billion accounting fraud. And guys, this crisis is still unfolding, so we don't know what else we're about to find out. But here we go. China is scrutinizing PwC's role in that $78 billion Evergrande fraud case. Again, PricewaterhouseCoopers, one of the big four accounting firms. This is a big black eye for that outfit. Chinese authorities are examining the role PricewaterhouseCoopers in China Evergrande's group accounting practices after the developer was accused of a $78 billion fraud, ramping up pressure on the global accounting giant that audited a slew of developers before the sector's meltdown. Chinese officials are now looking into PwC as they continue their probes of the developer's founder, Hui Kaiyan. According to people familiar with the matter, they're in contact with some former PwC accountants who handled Evergrande's audit. One of the people said, asking not to be identified, discussing a private matter. No decision has been made on whether to penalize the auditor, said the people, adding that officials are still investigating other suspected crimes of Hui. So I guess just more crime. Why stop at 78 billion? I mean, once you've gotten to that level, why not go for the full 80? You know, what's another few billion among crooks? And he was detained last year, but PwC, of course, declined to comment. So again, bad look for the accounting firms, guys. And hey, remember, you know, the fraud is the worst right before the crash. And, you know, it was the ratings agencies just blindly rubber stamping things last times. Now you've got the big four accounting firms blindly signing off on ridiculously fraudulent books. Hey, sign of the times, I guess. And that's not the end of the bad news for China this morning. We also got this one, China foreign direct investment. This is the year-over-year change in foreign companies making investments in China. And take a look at this chart. Does this look like healthy foreign direct investment in China? Down 19.9% for the month of February. And again, these are official government statistics from China, guys. So if they're willing to tell you that they're down almost 20%, it's a good bet. It's a whole hell of a lot worse than that. Foreign direct investment in China fell by 19.9% year over year to 215.1 billion yuan, or about $30 billion. In the first 2 months of 2024, around 72 billion yuan of that went into high-tech industries, including high-tech manufacturing. That's chip plants, chip fabricators. Foreign investment in the construction sector rose 43.6% year on year. That number kind of sticks out at me as rather doo-doo. Foreign investment in construction. If I've got money and I want to set it on fire, short of actually pulling out a lighter and actually literally setting it on fire, the quickest way to make that money disappear is to go invest it in construction in China right now. So the fact that they're saying construction in China rose 43.6% year over year, highly doubt that statistic. Maybe they're building data centers and chip fabs, but at the rate the rest of the construction industry is collapsing in that country, no freaking way. They're also saying investment in wholesale and retail industries went up 14.5%. Having a hard time believing that. All of the retail and wholesale, all the consumer data I've seen is showing severe weakness in Chinese consumers. Again, that video with Melody Wright from yesterday, she was highlighting big declines in sales that Gucci just announced, saying that Chinese consumers just ain't shopping right now. It's that wealth effect, guys. When people's homes are going down in value, they feel less wealthy. Even if their bottom line maybe isn't impacted, they just feel less wealthy and they spend less. It's called the wealth effect. It is very, pronounced in homes. It's more so than stocks. When stocks go up, people don't really spend more money. But when houses go up, people spend more money. And likewise, when houses go down, people really cut back on their spending. And that's happening in spades in China right now. And yet they're telling us construction sector is rising 43%. And retail and wholesale is up 14.5%. I seriously doubt it. But overall, down almost 20% foreign direct investment in China for the month of February. Companies are pulling out of that country, guys, because the world is deglobalizing. The economic divorce is continuing. The world is getting a little bit, what's the word I'm saying? It's not getting smaller because we're deglobalizing. I guess you could say the world is getting bigger, isn't it, economically speaking? Also, back on the subject of central banks this morning, we got one more here from Bank of Mexico. They cut overnight interest rates to 11%. The Central Bank Board of Governors voted 4-1 in favor of lowering their overnight rate. The Bank of Mexico cut its benchmark interest rate on Thursday in a split decision, kicking off what is expected to be a gradual and cautious easing cycle while inflation remains above its 3% target. The 5-member Board of Governors voted 4-1 in favor of lowering the overnight interest rate target by a quarter percentage point to 11%. That's the first change in the rate in a year and the first rate cut since February of 2021. One member, Deputy Governor Irene Espinosa, voted to keep the rate at 11.25%. The rate cut was widely expected. So again, we got a little bit of a dovish move from the Bank of Mexico here. And Bank of England holds rates, but says they're moving in the right direction for cuts. Again, a no move from the BOE, but a dovish tilt to it. The Bank of England on Thursday held interest rates steady at 5.25%, but hinted at cuts on the horizon as inflation falls faster than expected. The Monetary Policy Committee voted 8-1 to keep rates steady, with one member voting to cut by 25 basis points to 5%. Now, that one member voting to cut, you might think that's insignificant, but it actually isn't, because notably, no members voted for further hikes, and that's the first time this cycle after two members favored a quarter point increase at the previous meeting. So last time you had one person voting for a cut. I guess you had, 6 people voting for no move and 2 people voting for a hike. This time around, it's 8 people saying do nothing, 1 person saying cut. So we subtracted a few hawks. If you're subtracting a few hawks, you are by default adding a few doves. So this has been interpreted as a dovish move from the Bank of England, even though they really just didn't change rates at all. Moving on from central banks, we had a big one yesterday. Apple's problems continue to mount here. Apple loses $113 billion in value after U.S. regulators close in. A U.S. lawsuit accuses the iPhone maker of violating antitrust rules, and the company also faces a European probe over the Digital Markets Act. So it got problems on both sides of the Atlantic here. Regulators on both sides of the Atlantic are training their eyes on Apple, unnerving investors with fears over fines and threatening its market dominance. In the U.S., the Justice Department and 16 attorneys general are suing the iPhone maker for violating antitrust laws. And in Europe, the company is said to be facing probes about whether it's complying with the region's Digital Markets Act. Now, zooming in a little bit on this new development here with the U.S. regulators, the U.S. lawsuit alleges that Apple has used its power over app distribution on the iPhone to thwart innovations that could have made it easier for consumers to switch phones. The company has refused to support cross-platform messaging apps, limited third-party digital wallets, and non-Apple smartwatches, and blocked mobile cloud streaming services, according to the DOJ. Those are all viewed as anti-competitive business practices, which evokes the wrath of the regulators. And so Apple is taking a hit this morning. Well, they took the hit yesterday. They're doing all right this morning. They were down 4.1% yesterday. This morning, they recovered about 60 cents or about 0.4% of that. They're currently trading at $171.87. Apple has had quite a rough year here. Looking year to date, while the rest of the stock market is moving up and to the right, Apple's actually down year to date, largely because of these moves from the regulators in the U.S. and Europe. Also going on this morning, shout out to Macro Edge on X, who spotted this one. First of all, this came out last night, just before midnight. They tweeted this one out. Stellantis, the parent company of Chrysler, Jeep, Dodge, and Ram, sent notices to its employees about a mandatory remote work day tomorrow, indicating likely job cuts from the automaker. And, to midnight, come on, take it easy, buddy, here. My cat's attacking my foot again. To quote Office Space, we like to fire people on a Friday because studies show there's less likelihood of an incident. Well, if you can fire people on Friday while they're at home, well, there's even less likelihood of an incident. So last night, Stellantis told everybody, you know what, work from home tomorrow, which tells me it's going to be white-collar layoffs because you don't tell the guys on the assembly line to work from home. I'd love to see them try. So white-collar layoffs coming at a big U.S. automaker. And then again, Macro Edge, just a few moments before we went live at 8:36 a.m. Eastern time today, Stellantis has begun a large round of job cuts in numerous divisions over remote meetings per several employees attending various meetings this morning. So How'd you like to lose your job? How'd you like to be one of those guys who worked for the company for 20 or 30 years, only to find out over a Zoom call that you're getting laid off? That's what's going on this morning for Stellantis. The white collar recession continues here, guys. It's most of the job losses that we've seen in the last 2 years. It hasn't been that whole Rust Belt manufacturing being shipped, right? That was the story of the last few decades. This is white collar workers getting cut here as companies try to streamline things. And, well, the blue collar guys have largely sat this one out. And actually, the blue collar guys have made out pretty okay here. Remember, the UAW just got that monster raise off of the strike that happened late last year. The blue collar guys are doing pretty well in this economy. It's you office cubicle dwellers that are really taking it on the jaw here. Also, more bad news for Stellantis. Also hitting the tape just this morning, Stellantis recalls nearly 285,000 cars to replace side airbags that can explode and hurl shrapnel. Yikes. You get into a fender bender, you got enough problems. You don't need to worry about shrapnel getting hurled by your airbag. Stellantis is recalling nearly 285,000 Dodge and Chrysler sedans because the side airbag inflators can explode with too much force during a crash and hurl metal fragments at drivers and passengers. Screw them if they can't take a joke. It's just a couple of metal fragments hurling at ballistic speeds. The recall covers airbag inflators on both sides of Dodge Chargers and Chrysler 300 large cars from the 2018 through 2021 model years. The automaker says in documents posted Friday by U.S. safety regulators that moisture may get into the inflators due to a manufacturing defect and cause corrosion and cracks. The documents say Stellantis has 7 warranty claims and customer assistance reports, but no reports of injuries. Dealers will replace both side airbag modules, and owners will be notified starting on May 3rd. I have to take with a grain of salt here this no reports of injuries. How are you going to say if somebody's in a car accident and they're injured, it's real easy for them to say no reports of injuries because you got to prove that the injury came from the side airbag, from maybe metal shards being propelled with explosive force. Well, they just got in a car accident. Go ahead and prove that it was the accident or it was the inflator that caused those injuries. So I'm a little doubtful when I see the company saying, hey, there was no injuries. If there's no injuries, they wouldn't spend the money to recall and repair 285,000 vehicles. This is just lawyer speak saying there's no injuries that you can prove. That's a very important asterisk in that story there. And I just want to say thank you very much to M&J, who gifted 10 Nobody Special Finance Channel memberships. Thank you so much, M&J. And folks, if you are the recipient of a Nobody Special Finance Channel membership, be sure and thank M&J for doing so. Thank you, M&J. I appreciate that. And also thank you for the super chat. She says Melonhead membership gets you 1 free chat per month. Don't spend it all in one place, guys. 1 free chat per month. Thank you, M&J. I appreciate the driving of the channel memberships and supporting the channel. Also, thank you for everything you do as a Blue Wrench. Take a moment to thank the channel moderators for keeping things all neat and tidy in the chat. M&J is one of them. Also, thank you, Mish. Thank you, Nan. Everybody else with the Blue Wrench. Appreciate that. Welcome, new member, Dan Hadeen. Hey, Dan, send me a message if you heard anything about what's going on with Stellantis there. I know that's in your neck of the woods. It was interesting to hear about that one this morning. And thank you to Cole Marsh, who says, I love the mods here. Thanks, crew. Don't we all? Again, thank you, Cole. Appreciate the super chat, sir. And once again, shout out to my channel moderators for helping out. I love what you guys do for the place. And thank you to Learcy, who says, hip, hip, hurrah for the melon mods. Wow, it's like Mod Appreciation Day. All right, hitherto, from henceforth, March 22nd is Mod Appreciation Day. Show the mods some love by dropping a comment for the algorithm. I'll help myself to the algo. Nashville Pasta Man says, every day I feel more like the Front Point partners in Scion Capital. Big Short reference right there. Watching the collapse on CNBC, talking to my mom, saying, I'm going to act this one out. Ma, this is Armageddon, Ma. We're at DEFCON 2 here. Do you get it? Consumer debt is at all-time highs. They're still running up credit cards, and buy now, pay later debt is unsecured and not reported to the credit bureaus. All right. Tell Dad I love him. Bye. Yes. Thank you, Nashville Pasta Man. I appreciate that very much. And, I can't help but feel like these guys, too. I mean, somebody made some comment about NVIDIA stock on the air. I think it was on Bloomberg the other day. Some analyst who said something to the tune of, if you're not long NVIDIA now, you must think you're God. How could you not be long NVIDIA? Okay, sure. Say what you want about the customers and say what you want about the valuations. And yeah, eventually the bubble's going to burst. But if you're not long this company, you must think you're God. And then you've got Jensen Huang at this cheerleading session that they call the GTC conference, talking about his new chip that he claims breaks the laws of physics. No, it doesn't, Jensen. No, it doesn't. I don't care how shiny your stupid leather motorcycle jacket is. The laws of physics still apply to you, just like the laws of economics apply to you. Just like sooner or later, that round tripping with your customers is going to come back to haunt you. You can't change physics. I know you'd like to. You hear statements like that, Pasta Man, and you can't help but just think to yourself, there's a bubble. It's a bubble, like sign to the top. And it just keeps getting more and more ridiculous. One of these clowns who always sends me DMs, talking smack about NVIDIA all the time. He was on Twitter the other day claiming that it would get somewhere like in the quadrillions of dollars in valuations, and basically said this time is different 6 or 7 times in a row. Like, how stupid do you have to be? Like, go ahead, keep sticking your finger in a wall socket and then act surprised when you get shocked. It's going to happen. I mean, look, the numbers just keeps going up right now. But a stock moving in the upward direction during a mania doesn't make you right. It just makes you part of a FOMO rally. Good luck. Good luck with that. Thank you, Nashville Pasta Man. I appreciate the super chat, sir, and the support of the channel. And thank you, Dan Hedin says, white collar always first. We are seeing that for the better part of 2 years, Dan. I agree. The white collar layoffs hit first. But there have been buyout offers to the blue collar guys in the last few weeks. That's interesting. Thank you for that insight, Dan. Buyout offers for the blue collar guys. So first you get a raise, and then you get offered money to quit your job. How do I get those problems, man? So we're starting to see that. We saw some big blue collar hikes. Also, we saw some big pilot wage increases. There was a lot of big wage increases at the end of last year. They're just now starting to show up in the year over year numbers and wages. For the last couple of months, wages have just barely outpaced inflation. So, that has been a little bit, ever so slight amount of relief for the average wage earner after years of getting bludgeoned over the head by inflation. So it's a small amount of relief. It's not going to really make a dent. But it has been trending ever so slightly in the right direction. And of course, the market is not going to allow that. So right away, you get things like layoffs and you get things like offers to buy out, and, the Fed hiking rates and sending unemployment higher to 3.9% and rising. So it's probably not going to last. There's probably some weakness in the labor market ahead, and we are seeing signs of that this morning. Thank you very much, Dan Hedin. Appreciate the super chat and support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Just a reminder, I'll be back this afternoon at 3:15 p.m. Eastern Time for my weekly wrap-up live stream. Looking forward to talking to you guys on that one. Send a shout-out to my Patreon members and my magnanimous Melonhead members. Thank you guys for supporting the channel. I appreciate that very much. I had a good time talking to you yesterday on our weekly Zoom call. Links down below to all that good stuff should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.